What's up everyone, it's Kadi with MoneyVest. So I do apologize, I was not able to post for the last couple days. I was dealing with some personal stuff, but I'm back at it, and we'll be kind of showing you guys through this market update, kind of going over the technical analysis. It's been some time, and also run through some of the comments from Howard Marks and from Jamie Dimon as well. Howard Marks is somebody that I very much respect in the investing and finance space. I've read his book, The Most Important Thing. Highly recommend everyone to at least read it once. I think that book must be a recommendation for all investors in the market. So I highly recommend you that book. But as always, if you enjoy this video and find it helpful, please make sure that you drop a like and subscribe to the channel. If you're just joining us for the first time, and again, links to our Discord and Patreon is going to be down below. There's about 6 more days left if you want to take advantage of that 16% annual discount with a few more spots left. And you can access my entire buy target list, 30 stock shopping list of all individual stocks and my buy targets, as well as ETFs and the watch list, and of course the buy targets for those, and a lot of their members only private videos also included. So links going to be down below. We'd love to have you on board. So we're getting a little bit of a rebound from the markets, which is not a surprise considering how oversold we were, and the market breadth, such as the percentage of stocks trading above or below their moving averages, came down to really, really low levels, very attractive and very interesting levels. And of course, the S&P and the NASDAQ were down anywhere between 5 to 7%. So it is very normal for us to see a little bit of a rebound. The Dow Jones up 69 basis points, S&P up 1.2% on Tuesday, and the NASDAQ here pushing up over 1.5% as well. So we are seeing a broad-based rally in the markets as well. So Howard Marks basically says that the Federal Reserve is quote unquote not going back to ultra low interest rates. So the US economy is doing quite well, and so it is not clear that it requires stimulus. This is Marks told CNBC's Frank Holland on Tuesday. The current federal funds target of 5.25 and 5.5% is an emergency measure designed to cool off the economy and inflation. And one of these days we'll declare victory against inflation and the Fed will take rates down to something moderate and sustainable. I think that's in the threes. And I think I do agree with him that I think 2.5 to 3% is really what we're going to settle with eventually once we have finally rein in on inflation expectations coming down to 2% or lower. I think that's where we are potentially headed. And that again is unless we see a very severe recession or high levels of unemployment. So this entire thesis that Howard Marks is sharing is on the back of the economy being super strong, because that's the first thing he said. The US economy is doing quite well, and so it's not clear that it requires any stimulus, right? Any quantitative easing for that matter. He says, and I quote, "My thesis is we're not going back to rates of 0 or half or 1. I think that it is unnecessary stimulus, and I don't think that permanent stimulus is a good thing either. I think that interest rates should most of the time be set by the free market. That is to say, the negotiations between the borrowers and the lender, as opposed to having a central bank tell people what the rates should be. So I hope we are going back to that climate as well, where it is an open market, it is a free market, where the interest rates are set by both the borrowers and the lender as well." Jamie Dimon saying a very similar thing, echoing Howard Marks's analysis that the economy is quote unquote booming right now. So the US economy boom is unbelievable, is what Dimon said. And even if we go into a recession, the consumers are still in a very good shape. Still, he warned about the potential economic impact of deficit spending, inflation, and geopolitical conflicts. And Dimon has cautioned that inflation could be more persistent than expected, prompting interest rates to stay higher for longer. And I want to help my country, he said, and the government would be better off with more practitioners at the table. And JP Morgan has previously declined to comment such speculation or said that Dimon had no plans to run for office either. So both of them kind of echoing this tone of interest rates staying higher for longer. Less and fewer cuts is what the markets are pricing in. Inflation expectations continue to be elevated, considering that 2.5, 3% is where we are. We're going to get the personal income and outlays later this week. So on Friday, we're going to get the personal consumption expenditure as well as core PCE and actual headline PCE. So very, very important numbers, as well as consumer sentiment. We've got the GDP numbers also coming out on Thursday as well. So we do have a couple big economic reports scheduled for later this week. But really, the idea here is that we are seeing from the Federal Reserve, from other investors and from other strategists and market leaders, that inflation could be more persistent, could be more elevated, could be more sticky, and as a result, interest rates could be a little bit higher than the norm, right? Could be a little bit higher than what previously expected. So, in the threes is what Howard Marks believes. Jamie Dimon basically said they can be higher and more elevated for longer. And I also do believe that interest rates are not never, but it's going to be significant. It would require a significant catalyst for interest rates to go back down to 0%. And that catalyst would be a very, very brutal type of recession where unemployment does spike quite significantly. So unless that happens, I think we have to kind of agree that we are going to be settling in around 2 to 3% interest rates in the future. And that's, again, could be 12, 16, 18 months from now or 24 months from now. But that is really where we are potentially going to be. And the market is, of course, pulling back. Last week, seeing a little bit of rebound. This could very much be categorized as a little bit of a technical rebound. Meta pushing up almost 3%, Google pushing higher, Apple, Amazon, Microsoft, NVIDIA with a nice 3.5% jump, AMD, Broadcom, a lot of semiconductor stocks, and of course Tesla on the back of those earnings pushing up over 13% after hours, back to 160s. So again, a very, very strong move to the upside. I'll do a separate, more dedicated video on Tesla here very, very soon. But again, the entire market pushing higher. Technology, communication services, healthcare, industrial, cyclical, real estate, utilities, everything. All sectors were green except for basic materials. And in the last 1 week, of course, most sectors are green except for technology, which is down a little bit over 2.4%. And in the last 1 month, of course, it's been a little bit of a split market with energy, utilities pushing higher. Everything else has been selling off. So real estate, technology been pulling back as well. Lean hogs, we got natural gas, copper, palladium, everything pushing up with coffee prices, orange juice, and cocoa selling off. With Bitcoin here just under 67,000 and Ether just over 3,200 as well. So volatility back down in the 15s, down 7% yesterday. So we did get up to as much as 21. And that was 3 days ago. Very, very good buying opportunity. I mentioned this in our Discord. Again, straight up buying opportunity here. The risk reward is starting to look very, very good. And this is exactly the case in point. So, we've talked about on the channel multiple times, when the VIX is high, it's time to buy. This right here, folks, is a very good case in point. VIX was high, markets were lower, market breadth continued to sell off. If you bought, or had you bought, right, or had you basically dollar cost average a little bit, you would have been doing much better now, because 3 days in a row, VIX has been down, market's been pushing higher again. So there's a little bit of rebound back in play for the market, and of course volatility continues to slide lower. I think it's going to open in about 4 minutes here, so we'll take a look at how it's doing. Ether just over 3,200, and Bitcoin, like I said, also consolidating sideways inside that range. So the red line 72,000, that's going to be a huge resistance. Support at 61, 62,000 for Bitcoin as well. Now, very quickly, I'm going to go over my MoneyVest index reading as well. So this is where we are. So you can see a little bit of a rebound as the market also pushes higher. And this is very much in tandem with the market, because it's a combination of 5 metrics that we look at, and we have applied a formula, right? So it is obviously something that I've created using a formula, and along with the help of one of my team members who's basically back tested this strategy for us, and the probability of success was really, really high. It yielded a very good return. 3.42 is where we are, so a little bit of neutral range. And again, 3.2, 3.4 is kind of like in the dead center middle between like 1.5 and 4.75. A little bit on the higher end, of course, but we were obviously selling off. We were pulling back, as you can see, and now we're starting to see a little bit of a rebound back to the upside for this MoneyVest index. Now, the best places obviously are going to be in the 2.5, sub 2 area. So every time this indicator is basically green is when there is very clear and very obvious and very good buying opportunities for us in the market. Every time it gets in the red zone, in the actual place where it is approaching those higher 3.5 to 4.5 levels, then of course it's time for us to not be super aggressive, just be a little bit more careful and cautious and alert in the market, considering how aggressively we're pushing higher. So right now the reading is 3.42, and I'll keep a close eye on how it moves in the coming days and weeks to better sort of make decisions, and of course help everybody on Discord and Patreon with their decision making, and of course use this as a way to complement your trading and investing style as well, and when to be aggressive, when to be not so aggressive in the markets moving forward. Going over to the Treasury market, so yields are pushing up to 4.6. They obviously have been pushing up quite a bit since January of 2024. So since the beginning of this year, they have gone from 3.8 to as much as 4.6. So almost a full 1 percentage point increase. And the target, of course, is going to be all the way up to 5%, which is going to make it increasingly more difficult for stocks to rally even further, because as the risk-free rate goes up, the favoritism towards equities starts to go down, because again, the present value of all future cash flows starts to diminish at higher and higher interest rates. Crude oil, on the other hand, also getting a bit of a bounce. We talked about that support on the channel at $81 per barrel. We're seeing a little bit of rebound back higher, and that next target and resistance pretty much is going to be at $88 a barrel for crude oil, all the way up to $94 a barrel for crude oil as well. So that is going to be that next target to watch, with the support level, of course, staying put at $81 at the moment. Now, coming over to S&P 500 here. And as you can see, that we're seeing a very nice bounce back higher from the S&P. So we were obviously selling off. So from all-time highs, S&P was down over 6% exactly. Got a little bit of a nice rebound here, back above this area of support, I would say. Previous level that we have, tested as a resistance and as a support. So we're going back higher. Now, does this have the potential to retrace back up to the all-time highs? I mean, of course, only time will tell. But this right here is going to be that resistance level to watch now moving forward, because again, we have gotten rejected at this level, which then eventually became a support on the S&P. As you can see, that we kind of bounced back and forth here in and around that 5,100 level. So 5,100 is going to be that next level and that next target to watch. But I want to be very clear, we're still very much in the context of a downtrend. We're still making lower highs and lower lows at the moment here for the market, and of course lower lows over here as well. So just got to be super careful. Again, yesterday's bounce is good. It is positive. It's possible that, again, futures are higher right now, so we could see a little bit of that momentum again, but big resistance to watch right now on the S&P, 5,100 to as much as 5,110 on the S&P. NASDAQ also very similar to S&P. You'll notice a nice bounce after being down from all-time highs, a little bit over 8%. So almost got down to that correction territory and getting a bounce back higher from that 15,100 level. And resistance is going to stay put at 15,800. So that right there would be the very important level to keep in mind for the NASDAQ. If be able to break out of there, then of course there's potential for us to get back up to that target of 16.3, but that would be the first level to keep in mind. Apple, on the other hand, I believe pushing higher also on the day. So very nice rally up over 64 basis points, but still, of course, has a long way to go to getting back to where it belongs. And then, of course, the target's back up to 199 to 200, and a much stronger support here in the 150s for Apple. Amazon also getting a nice bounce from that support of 170. Resistance is going to stay put at 188 for Amazon moving forward. And right now, of course, we've seen a very nice consistent higher highs and higher lows, and nice uptrend for Amazon during this time. Tesla, on the other hand, getting a nice lift after hours, pushing up to 164, up 13%, even after missing EPS and revenue. I believe they actually did. Yeah, so I believe they missed on both EPS and revenue. So guidance apparently was a little bit stronger than what the expectations were. And again, I will be doing a complete full video on Tesla moving forward. I'll do that later today to kind of go over the earnings, break it down, and of course go over the technicals and where the price action could lead us for Tesla moving forward. 177 is going to be that next resistance and target to watch for Tesla. Next one on the list is going to be PayPal. And PayPal on the day was down up almost 2%, so a very nice move to the upside. Resistance is going to stay put at $65, so that is going to be that next level to watch, all the way up to $68, $69 per share, and a support level down as much as $57 for PayPal. Talking about Visa, and Visa here has been selling off. 290 is going to be that resistance and support level at 265. Of course, RSI, MACD, and of course the L3 banker oscillator, everything has been selling off for Visa, which is very common. Support level, like I said, is going to stay put at 265 with a resistance up to 290 for this company. Talking about NVIDIA, and NVIDIA here bouncing higher again after, of course, selling off a little bit over 20%. So it was in a bear market after the brutal sell-off on Friday. Last couple days pushing higher. Resistance right now is going to stay put at 845 for for NVIDIA with the support levels, this is going to stay put at 741. So that right there are going to be some levels to keep in mind, all the way up to $971 for NVIDIA as a resistance. Advanced Micro Devices also pushing higher from that support of 148. So that right there is a level that we talked about on the channel before as a very strong area of demand and support for AMD. And resistance is going to stay put up to 164 for Advanced Micro Device. So that's going to be that near-term target. Very, very oversold. So there is potential for a reversal trade on AMD here at the moment, considering how oversold it is from an RSI, MACD, and the L3 Banker Oscillator standpoint. Talking about Meta platforms, and Meta here consolidating sideways a lot. And again, resistance is going to stay put at 514 for the stock. Support level inside this green rectangle in the area of demand between 455 and 475 for Meta, all the way up to that resistance at 531 for Meta as well. So a lot of consolidation sideways, and that right there are going to be some resistance levels to keep in mind for Meta. Talking about Netflix, and Netflix also rebounding a little bit after the brutal sell-off post earnings, and resistance is going to stay put at 596. It does have a little bit of a gap to fill here after the earnings, and support level, like I said, is going to stay put at 537 for Netflix, and it has already rebounded about 6.5%, considering again oversold conditions for Netflix as well. Google, on the other hand, Google is probably one of the strongest names in the market right now. It's been pushing higher, trading at all-time highs. It's not oversold by any means, and pretty much pushing higher very strongly, trading at all-time highs. Market cap now almost at $2 trillion. Support level inside this green rectangle in the 150s, and resistance all the way up to 161, 162 for Google as well. And finally, we got Microsoft also getting a nice bounce from that support level that we identified. So this right here is the level that we talked about. Oversold RSI, oversold MACD, so it's not a surprise that we're seeing a nice recovery and a little bit of a bounce back higher. And resistance and target is going to be back up to $430. That's going to be the eventual target. But before that, we got 417 and 420 for Microsoft as well. And finally, we got Enphase and Costco, and Enphase here also pushing higher, up over 2.6%. From that support, again, previously we validated that level around $106, $108 per share. So we're still very much within the context of this green rectangle, which is an area of demand and support for Enphase, with, of course, a target up to $138, $139 for Enphase moving forward. So that is going to be that next resistance and target for the company. And finally, we come over to Costco, and Costco here also pushing higher, $750 is going to be that next resistance and that target level to watch, with the support level, of course, staying put at roughly low 700s for Costco as well. So hope you all enjoyed this video and a complete update on the markets here. Again, I do apologize. I was dealing with some personal stuff, so I wasn't able to produce as many content, as much videos here in the past, but we're going to be back here fairly soon. Traveling back again, just been taking flights after flights. I've taken like 6 flights in the last like 20 days or 3 weeks or so, and traveled to like 6 different places. It's been just absolutely exhausting and a nightmare, as you've seen a lot of different backgrounds in the last 3 weeks here. But yeah, just going back to Dubai later this week. As soon as the flood situation improves, I'll be back for another month. So hope you all enjoyed this video, find it helpful. Make sure that you drop a like, subscribe to the channel. Links to our Discord and Patreon is going to be down below. And as always, happy investing. I'll see you all in the next video.